Hello friends, in the series of income tax law and practice, we have discussed gratuity and encashment of earned leave in the previous session. Now, in this session, I am going to touch upon some problems based on gratuity and encashment of earned leave, so as to have more clarity regarding provisions in respect of gratuity and encashment of earned leave. Now, first I am going to touch upon the problem which is based on gratuity. Mr. Kailas receives a gratuity of rupees 11,64,000 when he retires on 23rd June 2011 after a service of 34 years, 9 months and 23 days. Now, his last emoluments are as follows: basic salary rupees 75,000 per month, DNS allowance rupees 15,000 per month, 50% as per employment conditions. It means in this problem the DA is granted by the employer to the employee, but out of which 50% is granted as per employment conditions. At the same time, Mr. Kailas has been given commission which is based on sales of rupees 12,000 per annum. Now, at the same time, Mr. Kailas has been given a servant allowance of rupees 6,000 per month, but this is not taken into account for consideration of amount of gratuity which is exempted from tax. Now, annual increment falls due on 1st January every year of rupees 3,000. It means the salary of Mr. Kailas is increased by rupees 3,000 every year on 1st January. Now, calculate amount of gratuity exempt from tax if Mr. Kailas is a government employee or is a non-government employee and is covered by the Payment of Gratuity Act 1972 or not covered by the Act. It means in this problem we are going to touch upon the provisions of gratuity in respect of a government employee, or if Mr. Kailas is covered by the Payment of Gratuity Act 1972, and at the same time we are going to also discuss the provisions when Kailas is not covered by the Payment of Gratuity Act 1972. Mr. Kailas had enjoyed exemption related to gratuity in the past year amounted to rupees 90,000. It means Mr. Kailas have enjoyed exemption in last previous year when he got gratuity of rupees 90,000. Now, this amount will be considered for calculating of gratuity which is exempted from tax under different situations. Now, we are going to have the problem worked out. First, Mr. Kailas is a government employee. In this case, gratuity received by Mr. Kailas is fully exempt from tax. As you know that any gratuity which is given to the employee who is a government employee and he gets gratuity at the time of retirement, or if he resigns from the service, or when he is no more in service on any account, then gratuity is fully exempted from tax. Therefore, gratuity does not become the part of taxable salary for the government employees. Now, if Mr. Kailas is non-government employee, then we have to further see whether he is covered by the Payment of Gratuity Act 1972 or not. Because in case of non-government employee, the gratuity received by the employee is not fully exempted from tax. It is partially taxable and partially exempted. Now, it is better that first of all we should discuss the provisions which are applicable in respect of a non-government employee, whether he is covered by the Payment of Gratuity Act 1972 or not. If it is covered by the Payment of Gratuity Act 1972, then the exemption is given to the extent of minimum of 3 amounts: 15 days salary for every completed year of service, second amount actually received, and third the maximum amount rupees 10 lakh. Now, on that basis we are going to calculate the amount of gratuity which is fully exempted from tax. First is 15 days salary for every completed year of service, that is rupees 90,000 is multiplied by 15 upon 26, further multiplied by 35, we get 18,17,307. Second is amount actually received, that is rupees 11,64,000, and third is rupees 10 lakh minus 90,000 is equal to 9,10,000. We have reduced 90,000 from 10 lakh because he has already enjoyed exemption in past previous year of rupees 90,000, and in this case the exemption cannot exceed rupees 10 lakh. Therefore, we have reduced 90,000 from rupees 10 lakh. So, remaining will be rupees 9 lakh and 10,000. Now, if we compare all these three amounts, we find that 9,10,000 is the minimum amount which is fully exempted from tax. Therefore, so far the taxability of gratuity is concerned, that is calculated on the basis of the difference of rupees 11,64,000 and 9,10,000, and that comes to rupees 2,54,000. It means 2,54,000 is taxable, and that will become the part of the taxable salary of Mr. Kailas if he is covered by the Payment of Gratuity Act 1972. Now, in this case, salary means the salary last drawn. Salary last drawn is calculated on the basis of basic salary and DNS allowance. Since he is getting 75,000 basic salary, at the same time he is also in receipt of DNS allowance of 15,000, that comes to 90,000. Now, DNS allowance is taken into account in all the cases. If DNS allowance is given as per employment condition or DNS allowance is not given as per employment condition, in all the cases DA is well considered when employee is covered by the Payment of Gratuity Act 1972. Now, in this connection, this note is very important. Fraction of 9 months and 23 days have been considered as complete 1 year. Whenever an employee is covered by the Payment of Gratuity Act 1972, we have also to consider the fraction of service of months. If this is exceeding 6 months, that is considered as complete 1 year. Therefore, instead of taking 34 years, we have taken up 35 years in this case. Now, what happens if Mr. Kailas is a non-government employee and not covered by the Payment of Gratuity Act 1972? Now, in this case, the amount of gratuity is exempted to the extent of minimum of 3 amounts: half month salary for every completed year of service, second amount actually received, and third rupees 10 lakh. Now, in this way we calculate half month salary is equal to 82,000 is multiplied by 1 by 2, further multiplied by 34, we get 13 lakh and 94,000. Second is amount actually received, that is again 11 lakh and 64,000, and maximum amount is 9 lakh and 10,000. This is the difference of rupees 10 lakh and 90,000. Now, in this case the minimum amount that comes to rupees 9 lakh and 10,000. Therefore, the exemption is granted to the extent of 9 lakh and 10,000, and difference again is taxable. Now, in this case the salary is equal to the salary of last 10 months, and we find the average on the basis of the salary of last 10 months. It means we have to divide salary of 10 months by 10, and after that this is divided by 2. In this way we got the salary of half months. Now, for this purpose, so far as the meaning of salary is concerned, salary is the aggregate of basic salary, DNS allowance as per employment condition, and commission based on sales. Now, in this problem the basic salary we have taken up of 10 months is rupees 7 lakh and 35,000, and 75,000 is DNS allowance. This is as per employment condition. At the same time we have taken commission of rupees 10,000 for 10 months. In this way we get the salary of rupees 8 lakh and 20,000 divided by 10, we get average salary rupees 82,000 is further multiplied by 1 by 2, again further multiplied by 34, we get 13 lakh and 94,000. So, in this way the exemption will be granted in respect of gratuity to Mr. Kailas if is not covered by the Payment of Gratuity Act 1972 is rupees 9 lakh and 10,000. Now, the note in this regard is very important. Fraction of service of months has been ignored. If any employee who is not covered by the Payment of Gratuity Act 1972, we never taken into account the service of months which has been performed by the employee, even if the service exceeds 6 months or it is less than 6 months. Therefore, in this problem we have considered only 34 years in place of 35 years that we have taken up in case if employee is covered by the Payment of Gratuity Act 1972. Now, the salary is calculated on the basis of the increment which falls due on 1st January of rupees 3,000. So, basic salary for last 10 months has been calculated in this way. Salary from August 2010 to December 2010 is rupees 72,000. This is before increment of rupees 3,000, and this is multiplied by 5 months, we get 3 lakh and 60,000. Since increment has taken place on January 1st 2011, therefore, the basic salary has gone up to rupees 75,000 is multiplied by 5, we get 3 lakh and 75,000. In this way, total salary of last 10 months that comes to rupees 7,35,000. So, this is the problem that was based on gratuity. Now, we are going to discuss the problem which is based on encashment of earned leave. Before we proceed discussing this problem, it is worthwhile that we should discuss the provisions which are in relation to encashment of earned leave. Any employee who gets encashment of earned leave at the time of retirement is fully exempted from tax only for government employees, but whether it is received by the private employees or non-government employees, it is not fully exempted. It is partially taxable and partially exempted. How much it is exempted? It is exempted to the extent of minimum of 4 amounts. First is 10 months salary, second salary of leave not consumed during the service period taking 30 days for every completed year of service, third amount actually received, and fourth is rupees 3 lakh, whichever is less is exempted. Now, in the light of that, we are going to solve this problem. Mr. X, an employee of the Rajasthan government, retires on January 3rd, 2012 and receives rupees 2,60,000 as cash equivalent of earned leave to his credit. Is it taxable? Definitely, any encashment of earned leave received by the government employee at the time of retirement is fully exempted from tax and never it becomes a part of the taxable salary. However, if government employee gets encashment of earned leave during the service period, then this is fully taxable and this is included under the head income from salaries. So, we can say in this problem Mr. X is a government employee, therefore, encashment of earned leave received by him on account of retirement from service is fully exempted from tax. Now, second problem is, and this is also based on encashment of earned leave. Mr. X retired from A Company Limited on 1st July 2011. After completing the service of 33 years and 9 months, he received encashment of earned leave of rupees 6 lakh. On the basis of 300 leaves stood credited to his account. It means Mr. X is getting encashment of earned leave of rupees 6 lakh and that has been calculated on the basis of leave which remains credited to his account at the time of retirement, say 300 leaves. Now, he was eligible for 30 days leave for every completed year of service. His basic salary for last 10 months was rupees 20,000 per month and he was in receipt of DNS allowance at the rate of 50% of basic salary, of which 50% was as per employment condition. So, 50% of DA is given as per employment condition and 50% is without as per employment condition. But so far as DA is concerned, this is taken into account only the part of DA which is allowed, which is granted as per employment conditions. Now, at the same time, he also received commission not based on sales of rupees 24,000 per annum. Now, whenever we calculate amount of encashment of earned leave which is exempted from tax, we consider commission only when this is based on sales. Since in this problem commission is not based on the sales, therefore, the commission is never taken into account while calculating the amount of encashment of earned leave which is exempted from tax. Now, we are going to calculate the amount of encashment of earned leave which is exempted from tax. Now, encashment of earned leave is exempted to the extent of minimum of 4 amounts: 10 months salary, salary of leave not consumed during the service period, third is amount actually received, and fourth is maximum amount of rupees 3 lakh. Now, if we compare all these 4 amounts, the minimum amount that comes to rupees 2,50,000. In this way, since getting 6 lakh as encashment of earned leave, we deduct 2,50,000 from 6 lakh and remainder is taxable, say rupees 3,50,000. Now, in this regard, these notes are very important. Service of months has not been considered. Whenever we calculate the amount of encashment of earned leave which is exempted from tax, we never taken into account the service of months which has been performed by the employee during his service period, even if the length of service exceeds 6 months. We just consider the completed years of service for this purpose. Now, DNS allowance forming part of salary has been considered for this purpose. DA is considered only when this is given by the employer as per employment condition. Therefore, in this problem we have considered only 50% of DA as for this purpose, because 50% has been considered for calculating the amount of encashment of earned leave which is exempted from tax. Since commission received by Mr. X has not been taken into account. Why? Because it is not based on turnover. If it is based on turnover, definitely it is taken into account for calculating the salary of 10 months, for calculating the average salary based on 10 months. After discussing problems based on gratuity and encashment of earned leave, now we start discussion of provisions which are in relation to pension. Now, pension is a retirement benefit. When an employee receives pension after his retirement from his employer, is fully taxable for all employees under the head income from salaries. Whenever employee receives pension as a government employee or non-government employee, it is always taxable under the head income from salaries. It means we do not make any discrimination between government employee and non-government employee so far as taxability of pension is concerned. Now, committed value pension. Committed value pension, it refers to the certain part of the amount which is received by an employee in advance at the time of retirement, which is belonging to so many years to come. Now, it refers to receipt of lump sum regarding pension which an employee receives at the time of retirement. Whether this amount is received by the government employee or it is received by the non-government employee. If it is received by the government employee, then this is fully exempted from tax and it does not become the part of the taxable salary. But in case of non-government employees, it is not fully exempted from tax. It is partially taxable and partially exempted. How much part of committed value of pension is exempted? It depends on the fact whether an employee receives gratuity along with committed value of pension or not. If he receives commutation of pension along with gratuity, then amount of exemption is calculated in this way. 1/3 is multiplied by normal pension or amount actually received, whichever is less, and minimum of 2 is fully exempted from tax. If an employee does not receive gratuity, then the exemption amount will be definitely greater than the previous situation. Now, 1/2 is multiplied by normal pension or amount actually received, whichever is less, is exempted from tax. Now, so far as pension received by the employees of UNO, it is not taxable in India, it is exempted from tax. Now, pension which is in relation to services rendered in India by the employee is always deemed to have taken place in India, and therefore, it is considered as an Indian income and is taxable under the head income from salaries. Dear friends, in this session we have discussed problems based on gratuity. At the same time, we also discussed problems at length in relation to encashment of earned leave. Besides discussion of these two problems, we have also touched upon the very important point, that is pension. Pension, as we know, it is a retirement benefit and which is given to the employee by the employer at the time of retirement. We have also discussed the provisions in respect of commutation of pension, whether it is received by the government employee or it is received by the non-government employees. Thank you.